So last time we spoke, interest rates were settling a little, the Bank of England rate still going up. As expected, the Bank of England rate did go up again with the last meeting. However, this hasn't affected interest rates too much on the mortgage side, although they are twitching slightly on the upwards direction for the fixed rate. Just to give you an idea of top of the pops of mortgage rates at the moment, if we were looking at a 75% loan to value band, you're looking around about the 4.23 interest rates for a fixed rate for 5 years for remortgage. If you're looking for house purchase, it's ever so slightly lower at 4.6. If we move up a little bit on the loan to value bands up to 85%, we're looking at slightly higher rates, but we're looking around about the 4.4 mark. And that's with a 5-year fixed rate. All of the fixed rates at the moment are still sourcing cheaper if we go for a 5-year deal rather than a 2-year fix. So we're still a little bit topsy-turvy on the market. Hot off the press in the last couple of weeks, we have had a new mortgage product from the Skipton Building Society who are now offering 100% mortgages. The product does carry one or two caveats. The mortgage payment does need to be the same as your rental payment or lower in order to meet sustained affordability. You do need to be a first-time buyer and you can put down up to 5% deposit on the product should you wish to reduce down the mortgage payment for yourself. It is new to market. They'll see how it goes and then we'll go from there to see which providers will join the party essentially. But it's great news for first-time buyers. Speaking to a mortgage broker is essentially important, especially if you've always done it yourself. The reason I say this is we do have the knowledge of the market and the knowledge of the lenders. Their rules and regulations are changing on a weekly basis. What a lot of people are frightened of currently is they think that they will be remortgaged out of their own home and they can't afford it. Now each lender has a different income multiple, so you might find some of the lenders on the lower end of the scale may lend you £50,000 or £60,000 less than other lenders that you may not have heard of. So sitting down with a broker would mean that you still get access to decent rates and you don't have to sit on the standard variable rate or panic that you're going to have to sell your property. That is the benefit of a mortgage broker. We see that every day. We've got differences in income multiples from 3.7 with some lenders up to 5.5 with other lenders. That gives you such a huge stretch, both on a remortgage and house purchase. So you might be able to get on the second rung of your house purchase rather than the first one. So it is essential that you sit down with a mortgage broker, and if you would like any help or advice, give us a call on the number below. Thanks for your time today.